All right, let's dive into a fascinating business case that's unfolding right now. We're talking about Siemens. This 175-year-old industrial giant is at a really interesting crossroads, and we're going to unpack the bold and, some might say pretty risky bet it's making on its own future.
So let's start with the headline number. Just look at this. In a recent fiscal year, Siemens posted a net income of 10.4 billion euros. I mean, that is a record-breaking number, and on the surface, it looks like a sign of incredible success.
But, it's never that simple, right? That massive number, it doesn't really tell the whole story. There's a bit of a tension hiding just underneath all that record profit.
And here's why. While the company as a whole looked great, its most important division, Digital Industries, which is really the heart of its entire industrial empire, well, its revenue actually dropped by 4%. That's a huge red flag.
So that brings us to the central question we're trying to figure out today. How can a company be hitting record profits while its core business is showing signs of weakness? What is really going on here? What's the actual strategy?
We're calling this whole situation the Siemens paradox. And if we really want to understand where the company is headed, we've got to unpack this puzzle.
And the key to solving this whole thing is right here in this quote. For almost 2 centuries, Siemens was that classic, sprawling industrial conglomerate we all know. But today, they're aggressively trying to transform into something completely different, a lean, focused technology company. That is a massive identity shift.
So how on earth does a 175-year-old company even begin to pull that off? Well, it starts by deliberately taking apart the very model that made it a powerhouse in the first place. Let's take a look at how they're doing it.
And this really shows you what we're talking about. On the left, you've got the old Siemens, that big, complex, maybe even a little rigid, traditional structure. And on the right, you've got new Siemens, something that looks much more like a dynamic, interconnected tech ecosystem.
Now look, this isn't just some corporate slogan on a PowerPoint. They have made some absolutely massive moves to make this real. They spun off their huge energy division, they spun off Siemens Healthineers, they're even selling down their stake in Healthineers to a minority holding. They're literally unbundling themselves to get laser-focused.
So this whole transformation, it really boils down to 3 bold, interconnected bets. These are the core decisions that Siemens is banking on to define its future.
Okay, so here they are. First, decoupling the portfolio. Second, making a huge platform play. And third, pivoting to put ESG, sustainability, right at the center of their business model. Let's break each one down.
All right, bet number 1, portfolio decoupling. So what does that actually mean? Well, simply put, Siemens is intentionally getting rid of the old safety net of being a massive company that does a million different things. It's trading the stability of that size for speed, for focus, and for the cash to invest heavily in things like software and AI.
So, the big question, has it worked? Well, this chart tells a pretty compelling story. By sharpening its focus, Siemens has boosted its industrial profit margin from around 10% all the way up to a much healthier 15.4%. The numbers don't lie, the strategy is delivering on the bottom line.
Let's move on to the second bet, which is a massive shift in how they do business, the platform play. This is all about changing the game from just selling products to actually owning the entire ecosystem.
This quote just nails their ambition. With their Xcelerator platform, they're not just trying to beat their old industrial rivals anymore. Nope. They're aiming to become the indispensable operating system for the modern factory, which puts them in direct competition with tech giants like Microsoft and Amazon.
And the momentum here is very real. As you can see, Siemens' digital revenue has been growing at a compound rate of 14% a year. I mean, that's more like a software startup than an industrial giant. This is already a multi-billion euro business, and their goal is to double it by 2030.
The third and final bet is the ESG pivot. But this is not about corporate social responsibility reports. For Siemens, sustainability is now a core product strategy. It's what they sell.
They've actually formalized this with something they call the degree framework. And this isn't just a list of corporate values. Think of it more like a product development guide. It ensures that critical goals like decarbonization, ethics, and governance are embedded as core features in the technology they sell.
And here's where you see the real-world impact. Siemens isn't just making itself greener, it's selling the tools for the entire world's green transition. Its technology is helping Deutsche Bahn's trains use 30% less energy and helping startups like JetZero design aircraft that could get 50% fuel savings. Siemens is positioning itself to be a key partner in global decarbonization.
So, we've unpacked the strategy,
We've looked at the paradox, and we've walked through the 3 big bets. Now, it's time to bring it back to you. It's your turn to be the analyst here.
So to sum it all up, the path is crystal clear. Siemens has decided its future isn't just in hardware. It's in high-margin, recurring revenue software and becoming an absolutely essential partner in the global green transition.
Which leads us to the final critical question. Is this the right move? Is this pivot to software and sustainability the strategy that's going to secure this company's future for another century and a half?
Or is there another way to look at this? By chasing that flashy tech company valuation, is Siemens taking its eye off the ball? Are they risking their historic leadership in industrial hardware at the exact moment that market is facing a downturn? The answer isn't written yet, and this is going to be a fascinating one to watch play out.